Hello, everybody. Welcome to the first webinar in Climate Bonds Initiatives India series. And the first webinar is on green asset-backed securities. This particular webinar will have a little bit of accent besides ABS on microfinance institutions. This will also dwell on how developmental and commercial organizations work together to cause social benefits and then look at how to scale it up. So somebody might ask, why microfinance institutions? The issue is that microfinance institutions have been a major beneficiary of ABS in India. And as you will see, as you go on, you will see that they have done a lot of funding through ABS. And there have been a lot of innovations also on this side. This will also dwell on the fact that outside of India, ABS has been a very powerful mobilizing factor for funds for green causes. So there'll be a sequence. It will be my colleague Prashant who will be briefing upon how green ABS has fared globally, how much it is doing to mobilize funds for green causes. And then we will come to what is happening to ABS in India, followed by how GIZ has worked with institutions to enable distributed renewable energy. And then we will have the CEO of MFIN who's kindly agreed to come here and to have a question and answer session with him. So without much ado, I will hand over to my colleague Prashant, who is the head of government and policy for Climate Bonds Initiative, to take us through a report and what some of the findings we had, and which will also bring into context the global context of ABS, green ABS, and what it has been able to do. So over to you, Prashant.
Thank you, Sandeep, for the kind introduction. I'm very grateful for friends from other organizations to join us and participate in this webinar. You can see from my name that I have Indian origins, but you can probably tell from my accent that I'm actually working in our London office. And as well as working on policy work in climate bonds, I'm also working with the India team to develop the work program there. What I'll be doing in the next few minutes is really going through some of the main findings of a report that was supported by the Rockefeller Foundation and completed back in December 2019. And just talk a little bit about some of the kind of international and local issues to do with ABS issuance in the world and in India. And our report also touched upon some of the problems that has been faced by green bond issuance, ABS issuance in the region, and how these are being rectified. So what I'm going to do is just talk through the various slides, and I think we can do questions afterwards. So this is just reminding us that India is itself quite an important source of green bond issuance globally. I looked up today that so far about 11 billion US dollars worth of green bonds have been issued, compared to a total globally of about just over 800 billion. So it's in there in the top 10. Overwhelmingly, green bond issuance in India has been on renewable energy, as can be seen in the right-hand graphic that we're seeing in this chart. Next, please. Next, please. What this slide is trying to do is explain what ABS or asset-backed securities actually mean for people. Can we go back one, please? What this chart is showing is just what asset-backed securities are for people who are unfamiliar with it. But these are a financial instrument that allow originators, be they banks or some other organization, to take loans or other assets that they currently own on their balance sheet, and to then transfer these to a special purpose vehicle, which is the second middle thing in green that you see there, and then to issue these to investors. Now, the essence of this is it's particularly suitable for some of the smaller loans that banks are having on their balance sheet, for instance, mortgages or loans for cars or loans to farmers. So it's a way of taking very, very large numbers of very small loans, which are currently sitting there on the bank's balance sheet, preventing it from lending to more different lenders and transferring it to other long-term investors, for instance, pension companies or insurance companies. What the graphics at the top are showing is that other parties can come in as well. So as well as the original loan, organizations like GIZ can come in and potentially issue credit enhancements, which makes them more attractive to external investors, especially people, organizations that are interested in investing in India or interested in green assets. And what the last right-hand side is showing is that this special purpose vehicle, which is now holding these loans, they can actually break up the portfolio. So you take these thousands of individual mortgages and split them into different tranches so that investors with lower risk appetite can take the junior tranche. Investors with a greater risk appetite can take the mezzanine tranche, and investors with the greatest risk appetite can take the junior tranche. And these are often held by the bank themselves that created the asset, so they're sitting with the risk. So what this graphic is showing is that the asset-backed security or the securitization process allows often a homogeneous set of loans or to be transferred across to end investors in such a way that investors with the different risk appetites can take part in this particular issuance. Next slide, please. So why are we talking about green ABS and what's the interest to India? The reason why this is being brought up is really because it allows greater numbers of investors to participate in this market. And some of the things on the right-hand side kind of identify these type of advantages. So within India, often banks have priority sector lending targets, for instance, to agriculture or to energy. And this allows organizations that have hit those targets to then transfer those across to somebody else and to originate new loans. A second issue is that some of the kind of underlying projects, for instance, solar panels, solar PV, they have really long-term liabilities. The actual lending is being done for a 10-year, 15, 20-year time horizon. And often bank loans are much shorter in their duration. So what this is allowing to happen is end investors, for instance, pension companies who are also interested in long-term liability assets, they can sort of participate here as well. A third issue is it can bring down the cost of finance by potentially bringing in foreign investors who've got cheaper sources of capital. Fourthly, it can allow this loan pool to be separated and segregated into high yielding, lower yielding. So if investors are looking for a higher yield, prepared to take on more risk, they can be accommodated. And it's a way of actually changing the profile of exposure for a bank. So if a bank is very heavily lending to a particular class of asset, you can change that by essentially offloading some of these risks. So next slide. Now, what this graphic is doing is just reminding us of how asset-backed securities, green ABS, is working globally. Now, altogether, I think as I mentioned before, we have something like 800 billion worth of green bond issuance globally, and asset-backed securities are currently accounting for about 110 billion. So it's roughly 1/8. And you can see that they were picking up quite significantly over time. 2017 saw a really surge in issuance, and that was really due to one particular issuer, Fannie Mae, and you see that little yellow mark there. That was a large issuance by France. But it's been a fairly substantial chunk of issuance, and particularly by this particular entity, Fannie Mae, which has been responsible for about 2/3 of all ABS issuance. Next slide. Now, the thing I wanted to sort of mention is that India is quite an important source of green bonds altogether, but so far it hasn't done any issuance of green ABS. And this is partly to do with the way that the asset-backed security or securitization market in India is working already. So what this graphic is showing is that over time, there's actually been a relatively muted activity of securitizations over time, quite steady, not very high. And this was really been sustained really until 2018. And suddenly in 2018, for a variety of reasons, which I'll touch on next, there's a big surge in issuance, and this has pretty much doubled, but still to quite a low level of something like 200,000 crores rupees. Next slide. I just want to sort of explain a little bit about the type of deals that have been occurring in other countries on green ABS. So there aren't any examples in India I can point to, but here are a couple of examples in other countries. So what kind of pool of assets comprise these ABS deals? On the top half, I'm showing one particular issuance, which is Toyota, the car manufacturer. It was taking car loans because of it was leasing out vehicles. These were for Prius type cars, bundling them together, and to free up its own capital, then they issued them in 3 different green ABS tranches, one in 2014, one in 2015, one in 2016. And this pool of loans was to do with the auto loans. The revenue coming in to the pool to pay off the coupon was from the lease funds, and it was a green ABS because the funds were specifically for funding electric vehicles and hybrids. And altogether, the very first pool, the 2014 pool, it accounted for something like 40,000 vehicles. So cars and auto loans are an example of the kind of thing that can be issued through green ABS. Another one below is another common sort of ABS. This is for small loans for solar PV, and I'm hoping that we'll be hearing about this particular type of asset class from other speakers. But in 2016, Australia's Flexi Group issued a green ABS, and really this was to do with the refinancing of money it lent out for changing people's homes to make them to install solar PV. And interestingly, we find that the green tranche, I mean, at the same time as issuing a green ABS, they issued a non-green. It closed. It was a little bit cheaper source of finance, about 5 basis points. I must say that this isn't a guarantee that finance will be cheaper. Subsequent issuances by Flexi Group haven't been quite as keenly priced at 5 basis points. The next one's 3 basis points. Next slide. In our report, we go into some level of detail about why India has been maintaining this kind of low level of ABS and so far no green ABS. There are problems on both sides of the market, both on the issuer side and also on the customer side, the demand side. One issue is that there's actually quite a small primary green loan market, and so therefore not many loans to convert into green ABS. Transaction costs for this process of creating the special purpose vehicle and doing securitization are quite high, and unless you've got a certain size of deal, it doesn't necessarily make sense. Often issues have been to do with low carbon. It's not necessarily where the lending is taking place, and therefore it's not been a particular priority. And within India, we don't yet have a very sort of clear taxonomy, a definition of what is a green as opposed to a vanilla loan product. And we need more sort of structured ways for banks to identify which of their underlying loans are green, and we call this green tagging. And a last issue is obviously to do with, I mean, within the Indian context, a lot of the debt securities are really government debt products. So there is an issue that the underlying profile of some of the loans being made to smaller organizations don't necessarily have the credit rating that's sufficient. On the demand side, I'll keep it very quick now because my time is running out. Really, we need to make sure that there is actually a demand for the kind of green ABS products, and that really is to do with regulations. So in the past, Indian mutual funds have had unfavorable tax treatment towards ABS products. There have been restrictions on the percentage of pension fund holdings in ABS products, and a minimum requirement for credit quality. And the insurance regulator is capping the amount of ABSs that can be part of the insurance fund. And until recently, foreign investors were precluded from the ABS market, which again was a major kind of issue. So that was the problems that have been arising so far, and some of these are being now addressed. Last slide. Last slide. So in the report, we make a number of recommendations. I mean, firstly, this idea that priority sector lending, that's what's really driving a lot of the kind of the initial formation of the green loan. So it would be very good, I think, if priority sector lending actually embraced the idea of green renewables, for instance, rather than a more general energy priority sector. The idea that we should be extending credit guarantees for some of the kind of small and medium-sized investments is important as well. And some of the kind of state-level organizations, some of the kind of funding for agricultural loans and for some of the small-scale solar roofs can be done at the state level. So this idea of warehousing to make sure that we actually can make sure that we have the appropriate aggregation facility. And some of the other recommendations are stopping some of the kind of artificial regulatory restrictions on insurance companies and on pension companies, which forbid them from investing in ABSs. There has been really substantial issues about the slowness of the court systems to sort out and resolve complaints. Obviously, if you've created a special purpose vehicle and there's some kind of problem arising, then it does need a legal framework where investors can quickly receive remedy. And one of the issues which some people have identified, is that we need to have a standard documentation so that if you're pooling large numbers of solar loans or auto loans or agricultural loans, they have a very standardized way of writing it so that these can be rapidly pooled and then sold on through the special purpose vehicle to the debt capital markets. So these are some of our recommendations, and I'm looking forward to discussion afterwards.
Hello, I have some questions. Let me relate one by one. So I think the first question is about what makes US the leading country in issuance of green ABS?
Fannie Mae. I mean, basically, there's two reasons. I mean, one is that US has a long tradition of creating these kind of financial products, so it goes back a long way. And particularly Fannie Mae, which is, for people who are not aware, this is essentially an organization which has been set up by the government to act as purchaser of housing loans that have been extended by other financial institutions. So it repackages these and sells these on. So Fannie Mae has been single-handedly responsible for around 2/3 of the entire green ABS market globally. So its actions are very much driving it.
Conscious of time, I think I'll come back to the question and answer maybe a bit later. Some of the questions might be better answered by Anshul. So Anshul, it will be now the chance of Anshul Gupta from Northern Arc. So Northern Arc in India stands for ABS to a great extent. It is nearly synonymous with how ABS functions in India. Of course, there are some other transactions, but they have quite a dominating presence. So Anshul will explain in this presentation the model of Northern Arc, what they have been doing, their attempt at green variety or green bonds, their ability to facilitate capital for microfinance institutions and other institutions. So over to you, Anshul, and here is the first slide for Northern
Arc. Thanks, Sandeep, for the kind introduction. So quick background about Northern Arc. We are a RBI registered NBFC, set up almost a decade back. Our primary work area has been in the financial inclusion space. We started with microfinance, then branched out to commercial vehicle finance, SME lending, affordable housing finance, consumer finance, and then corporate finance. So how we work is rather than directly going to the end borrower, we work with our partner financial institutions, facilitate in the flow of capital to these institutions, and these institutions in turn reach out to the end borrowers. So presently we work with almost 200 odd entities for whom we have facilitated more than 10 billion worth of dollars worth of capital over the past decade. Almost 20% of this capital has come from our balance sheet. The remaining 80% has been arranged in a partnership with our 150 odd investors. From an equity investors backing point of view, we count Dwara, Trust, Leapfrog, Eight Roots, IFL Asset Management, FMR Capital as our equity investors. Our latest equity round was almost 5 months back, in which one of the largest Japanese banks participated, which is SMBC. Next slide. Right. So, like Sandeep mentioned in the introduction, role of ABS for microfinance in India has been very significant. We structured India's first microfinance ABS back in 2009. Ever since then, microfinance has been featuring in the top 3 or 4 asset classes in the ABS market. And India is the only large ABS market in which microfinance has such a dominant market share. From a industry point of view, almost 20 to 30% of incremental liquidity for the sector comes from securitization. Last fiscal, almost 30 microfinance entities participate in the ABS market. Around 70% of in tapping this very important product. And this product, in some sense, has stood the test of times. For instance, post the ILFS default, when the entire credit market kind of froze, Northern Arc joined hands with MFIN and structured a fairly large multi-originator ABS transaction, under which 11 microfinance entities in a single transaction were able to raise more than 100 crore worth of capital. The investor saw a lot of value in such a transaction, because even though some of these entities might have been geographically concentrated, but when you put all these different entities in a single transaction, the consolidated pool is very diversified, both geographically and even from the servicer risk point of view. In the next 2 slides, we'll discuss how some of these structures can help in channeling capital efficiently, even in the green financing space. So, Northern Arc, to a certain extent, already has presence in green financing. Almost a year back, we raised a fairly large green bond from a foreign impact investor. The proceeds of the bond were utilized to give credit to our various financial NBFC partners, who in turn deployed the same to end customers for specified end green usage. For instance, a commercial vehicle financing entity utilized the capital for financing purchase of green efficient battery operated vehicles or CNG operated vehicles. Microfinance entities deployed for water and sanitation loans, purchase of solar lamps, clean cooking stoves, and so on. In terms of the structures which can work in this segment, of course, I think green ABS is something which I personally think is a very scalable structure, and all the entities, the entire ecosystem operating in this space can benefit immensely from this structure. How something like this can be structured is we can take a pool of already originated green loans, sell it to a SPV. Since a sale is taking place, the SPV will need to give a cash consideration to the originator. This cash is raised by the SPV by issuing pass-through certificates to various investors. These investors can be impact foreign investors, impact domestic investors, NBFCs, banks, HNIs, alternate investment funds, and so on. This capital in turn can be utilized by the originator to generate a fresh set of green loan, which can be refinanced in a different transaction. Some of the scenarios in which such a ABS transaction can work is, for instance, let's say a housing finance entity is financing purchase or construction of green and efficient mortgages, or a microfinance entity is present in some area and providing credit to various individuals for purchase of solar lamps or clean cooking stoves, and so on. Next slide. Right. So another couple of structures I wanted to discuss with the audience. In number of scenarios, we observed that there are various foreign impact investors who want to help but have capabilities of writing small checks. Now, to structure multiple small transactions is a tough task. For such scenarios or similar other scenarios, one can set up a pooling vehicle, for instance, alternate investment fund. The alternate investment fund can raise capital from multiple investors. The end use of the alternate investment fund can be documented and crystallized in the documentation of the AIF. This money can be provided to various NBFCs and corporates, etc., who in turn can utilize it for the desired green use. Another structure which can substantially reduce cost for green financing is issuing green credit enhanced bonds or green covered bonds. Covered bond as a product is one of the most robust instruments worldwide. In India, we structured country's first covered bond recently, almost a year back. As part of the transaction, triple B category vehicle financing entity was able to issue a liability which was in double A category. How the structure works is NBFC issues a liability and in parallel assigns a pool of identified loan receivables to a special purpose vehicle. The liability of the NBFC in turn is guaranteed by this special purpose vehicle, which carries a pool of bankruptcy remote loan receivables. From an investor's point of view, the investor has dual recourse. One is on the balance sheet of the issuer. In case if the issuer were to default, then the second recourse is on the bankruptcy remote pool, which houses within the SPV. So I think these are some of the structures which can nudge investors to look at this segment and potentially lower the residual risk for them significantly as well. Over to you, Sandeep. Sandeep, I think you're on mute.
Yeah. Anshul, there was some news recently about trade receivable securitization transaction which you did, and since it's recent, I think people would want to know about it. And what do you think can be the green variants? Can you briefly explain that and what the green variants are?
Right. So Sandeep, I think most of us know that invoice financing in India has been dominated by banks and NBFCs. For instance, a foreign investor or a mutual fund investor cannot directly discount or finance an invoice receivable because invoice in itself is not a security. For these investors to access this asset class, they need an instrument. So as part of the recent transaction that we did, we created a SPV, which in turn issued rated and listed pass-through certificates, which could be subscribed to by potentially any investor. And various vendors who had raised invoices to large anchors or corporates discounted their invoice receivables by assigning those receivables to the SPV. The money that SPV had raised from various investors was given to vendors as a purchase consideration for the underlying invoice receivables. So like I said, what this structure does is it allows for very efficient price discovery, because while traditionally only banks were able to tap this asset class, now any foreign investor, mutual fund, HNI can provide capital to this segment. Coming to your query on how this can be possibly scaled in a green financing segment as well, I think like all of us realize that working capital gap in India exists in almost all the sectors. So the same transaction can be replicated to provide capital to supply chain vendors of, let's say, in renewable sector, for instance, let's say vendors supplying raw material for construction of green efficient buildings, for battery operated vehicles, and so on. I mean, the number of cases are immense.
I have a question from an attendee. In case of multi-party asset pools, if one party defaults, are all assets impacted?
No. So in case of a multi-originator transaction, one entity does not cross-subsidize for the default of other participating entity. Having said that, there is a common subordination provided by a third-party investor, either as a common guarantee, common cash collateral, or investment in junior tranche. Because of that common subordination, the diversification benefit comes, but one entity does not cross-subsidize the other entity.
Okay, thanks. Maybe we can talk about this a bit later. There's a question from Mohua Mukherjee. It says that, can speaker please talk about monitoring and verification requirement by investor? Who sets the KPIs that these investees have to meet? Investees have to meet. Would you want to talk about this? Will it take I'm a bit conscious about time. If it doesn't take much time, you can take it now, Anshul, or maybe later, whichever way you want.
Sandeep, can you repeat? I did not hear the question.
Yeah, about monitoring and verification requirement by investors. Who sets these KPIs which that investees have to meet? Basically, do investors ask for certain monitoring and verification requirements? And then how do you set what you will monitor and what you will report?
All right, so the servicer reporting is done by the originator. So on a periodic basis, the originator needs to submit monthly servicer reports, which are pretty detailed. Additionally, when we structure these transactions, we also appoint an external auditor who does the audit on a sample basis. For instance, maybe 10% of loans, which will be randomly selected, will be audited by such an auditor. So these kinds of checks and balances and monitoring is done for each and every ABS transaction.
Okay. There is one more question about, some of the assets you mentioned, which you did in your green bond. Can you conceive of a few more? You had already mentioned some. Can you conceive of a few more?
All right, so I think there are various new asset classes which are coming. For instance, we see a lot of potential in sustainable, climate resilient agriculture space. A lot of our microfinance entities are also partnering with a number of such entities who are educating various farmers in the country and helping them in transition from the traditional ways of doing agriculture to a system and process wherein the farming is much more climate resilient and has a much lower carbon footprint. So there is a lot of capital required in this transition as well. So from a green financing point of view, this is a very interesting space to be in.
Okay. Thanks a lot. We have one more question about RBI guidelines, but I am a bit conscious about time. We might take it later. Otherwise, we'll write back on that question. Uh, I would now want to go over to our next speaker, who's Anshul Duraiswamy from GIZ. GIZ, as you know, as you people must be knowing, is an organization which is promoted by the government of Germany, and GIZ has been on the forefront of many developmental activities in the country. And today, the activity which we will talk about, which is actually relevant to quite a lot of microfinance institutions, is how they have enabled India's largest microfinance institutions, which is Bandhan Bank, to be able to lend for solar devices in a controlled manner. And then, so that's we will look at now. Over to you, Yeswanth. Thanks.
Thank you, Sandeep. Thank you, Anshul, for the setting up for my presentation. This will be more focused on how we promoted business models where loan product and working along with stakeholders, we have created a business model which help improve access to energy to end users. So that is the basic overview. Next, uh, in the presentation plan, I will be talking about what is the GIZ intervention in India with reference to decentralized renewable energy. Then I will be talking about, as Sandeep mentioned, Nakshi Creations Private Limited, the business model, which is earlier called Bandhan Creations, and the way forward. So next, please. So GIZ, to introduce, as Sandeep mentioned, it is a German technical arm which helps, which is in operation in India for more than 6 decades, and it works in 4 major thematic areas in India, and energy is one of the main focal area. And we have a number of programs which focus on renewable energy, mainly access to clean energy, promotion of solar water pump, green energy corridors, energy efficiency buildings, etc., which where all the solutions are focused on socially and environmentally sustainable one. That is the main focus of the solutions. So we have a different program. We started access to clean energy, which I represent. We started with improving the access of electricity or energy to the people, end users. And now it has expanded to livelihood activities. It has a great impact on livelihoods and solar water pump initiatives. In the phase 2 of our program, we are mainly focusing on 3 aspects. We are helping state government to develop a strategic energy planning, and the business models and financial instruments which we have tested and piloted in phase 1, we are trying to scale up in phase 2. And we also work on developing new concepts and pilot it in special conditions. So these are the 3 major activities of phase 2. So coming to this business model, which we have promoted in association with Bandhan Creations, Bandhan MFI. It was earlier it was mentioned as Bandhan Creations, but now currently they have become a standalone organization of their own, which is called Nakshi Creations Private Limited. We are in association with this Bandhan for more than from November 2000 onwards, 2017 onwards, sorry, in phase 1 and phase 2. And the main idea is by providing clean, affordable energy services, energy products, we can improve the quality of life. So the current operations are in 5 major states, and now they are also planning to expand in other regions, in new geographies. Next, please. Next. Yeah, thanks. So what is the approach adopted in the business model? Mainly, we are focusing on the program focus on the Bandhan members who have access to financial services. Already who are part of the microfinance services, they are the major focus. And also those who can become a potential members in the long run with not only with the microfinance product, but other kind of new financial products, mainly with priority sector, agriculture, animal husbandry, that kind of things. And the entire setup is leverage based on the trust built by Bandhan over a long period of operation, the NGO's operation, that trust is leveraged with the community. So it starts with customer education, where we introduce the concepts. What is solar energy product, solar home lighting system, how it works, decentralized renewable energy. That part is the main focus point. Customer education happens, and it's followed by the product demonstration at the meetings at the household level. The products are explained, what are the advantage and how it is useful. So based on that, yeah, affordable financial products are developed. The loan products are finalized based on consultation with the community, based on consultation with different stakeholders who are involved. In this entire setup, the technology service provider play a major role because they help us provide with customized product for the end users. Next, please. So this present a overview of the business process, where the staff members reach the households, need assessment, product identification. It is not one product which is given to all people. It is based on the need and requirements of the community, because the geography is very great. And it also provides with loan options. It is not a one loan product which is given to all, but it is a customized loan options are given to the community members. And there is a delivery of services at house. So there is an guarantee of 2 year for every product, so that there is a good after sale services available to the people. Yeah, please. So these are some of the products which are promoted as part of this initiative. As you see, the range of product is high, and it depends upon the customer's interest and ability to afford a particular product. It is not everybody is forced to purchase a particular product, but they are given the option, and the option of choosing is always there. Yeah, please. Next. So I have broadly tried to put everything in one chart. These are different stakeholders who are involved. For example, if you take into the picture, if you want to develop a business model, there are a number of players involved. The first thing, access to finance, which is done by the Bandhan Bank. The energy product suppliers would, there is a range of products available for the depending upon the requirements, customer requirements. And there is Nakshi, which is the social enterprise, which provides the education, demonstration, overseas sales and distribution aspects. So this is stakeholders who are all involved in the process. And the initiative, the business model also helps in developing village level entrepreneurs. So there is a job creation that is happening at the entire value chain, where the members of this Bandhan initiatives are trained to provide the services for these households. Yeah, please. Next. So these are broad numbers which we can see. The idea of working with renewable energy at a Bandhan level started in 2014, and it was gradually increased in terms of household or money spent over a period. When GIZ entered that setup, and you can see a jump in terms of number of households covered, and backup of finance for reaching out to these households. Yeah, next. So overall, there is a awareness creation in a period of less than 4 to 5 years. We have covered around 18,000 households have been reached. Awareness of solar product. Most of the people are aware of why they are using, what is the advantage of using DRE, and how eco-friendly and how they are contributing their own part to the green energy systems. So that is also there. And as of now, 3 lakh households have been covered. So overall, when you look into the system, it is this has happened because of a collaborative network of different stakeholders. As you see, there is a technical partner, is the product partners are there, finance company, one who give access to finance is the community organization which mobilize or aggregate the people or there. All these things comes together to uh, achieve this success. And we have tried out with the green finance option in that, please, yeah, yeah. So we have tried out with the green finance option also, carbon emission reduction part. Due to this initiative, only from phase 1 only, we have around 24,732 carbon emission reduction, and it has been tested and evaluated by external organization. So carbon credit aspects are also been developed and externally evaluated for this Bandhan initiative. So next. So what we see is that there is a shared long-term vision is there between the Bandhan as a organization and Nakshi, the social enterprise, and other stakeholders involved. And we try to create a clear roles and responsibility for each and every stakeholders who are involved in the process. That give you a clear idea what is the responsibility for each and everyone. And we leave leveraging existing networks. It was developed over a period of 15-20 years that leveraging positivity was there. It is more of a customer-centric approach. It is not a one-stop idea which is forced into the people, but it's more of a customer-centric. Lot of need-based assessments have been taken, and products are recommended based on. And we also have a separate human resource. There is a clear distinction between microfinance staff and energy staff of this initiative. It gives a better idea and goal for these staffs. And the system as a monitoring and feedback mechanism. That is one of the important contribution of GIZ in the entire process, where we help to develop a feedback mechanism so that the end-to-end solutions are provided to the people. Yeah. Yes. So as a way forward, this is one example of big success we can achieve from Bandhan. But we are exploring a new partnership with other kind of MFIs and networks to take it forward, which will be in new regions and a new geography, mainly with the idea of providing access to clean energy. And we are planning to work with institutions to develop a new financial product other than what we have already tried with the Bandhan in a Nakshi initiative. We are also trying to create a new financial product with potential networks and financial institutions. And that is another idea of, in addition to this solar home lighting systems and small DRE structures, we are trying to identify new products, mainly with reference to those which will help promote livelihood activities. So that is also as a way forward thing we are trying to in the coming days. Yeah, thank you.
Okay. Yeshwant,
Yes.
thanks a lot for this presentation, and I'm sure a lot of people would have appreciated. I'll now, the slideshow is over, so I would be taking off the slideshow. So the first question, which is unfortunately slightly based on some feedback, is that what are the best practices, which Nakshi and Bandhan took upon to avoid situations, which there have been some reports of some of these MFIs tantamount to bundling a product with some other things and saying that, I'll give you a loan only if you buy this with this, so that there's no forced selling. It's tantamount to forced selling. There have been some reports around it. So I just thought, what was the governance that, Nakshi and Bandhan did so that it didn't happen?
Okay. So if okay. if that is support selling or bundling of product selling is there, then the numbers I would have quoted would have been triple or four times. That's what I will say, because we had an internal project evaluation by the team, and we could see of the total members, only about 40% of the total members have been covered with the DRE products. Specifically with the Bandhan customers, what we could see is out of if there are some 10 members or there in a group, 5 members actually. So 10 members are there in a group, only 4 are have purchased the DRE product, and others are yet to get the products, or they have not taken those products actually. That is first thing. And second thing I will also say is it is more I mean, unless many of other organizations, many studies are undertaken by Bandhan or Nakshi before introducing the products. That is the one main thing. So it is solely I was highlighting the customer centric point. So when there is a real demand from the field, then it goes from field level to next level to next level. Then the top level management talks with the technology service providers, and the technology service provider recommend their suitable product. So the demand is generated from the field, and not it is from top to down. That's
Okay.
what I think.
Okay, so there's a question from Samir Gupta. Say for a middle class urban household, what is the average payback period for a rooftop solar installation? Does it make sense for an urban consumer to switch to solar power instead of conventional grid power supplied by the utility?
I'm really I'm really sorry. I may not be
Okay.
I cannot
Yeah, we will write back to you.
explain it
Samir. We'll write
with
back to
numbers, but I will ask my fellow team in GAZ
you.
and definitely get back to you.
Okay. So what are some of the social benefits of these DRE products?
Okay. I mean, definitely there are, as I mentioned, there are 2-3 studies, not only internally by Bandhan people, but also by external teams, and carbon credit and carbon credit team also did one study. So many of these advantages, I will say, there is a continuous supply of energy, though many of these places are electrified, but their supply of energy is a challenge. And because of a solar product, the people were having a continuous supply. You can discuss with many of them during the cyclone time, when many of the region were dark, or there was no electricity supply for more than 1 week, mostly in Assam areas. There was people using this DRE solar lights. Second thing is it also helped in improving the number of hours people working actually. For example, if they are doing a small roadside business, when the lights are, when they usually do business for 1 hour, 7 o'clock, like kind of thing. But now that time limits have increased, and it has a very significant impact on the income. And one more thing I will say is people students studying, that I will say, because when I visited one of the places, the small children who used to come and start writing their homework, they were now saying they will go out, play for some time, then they come in the evening and work, because there is access to lights out there. So these are some of the things. And overall, if you see, I will also say there is a some kind of unlocking finance is also happening because of access to energy. People are able to trying to get loans. People are trying to invest in business. That's also happening. These are some of
Wow,
the
that sounds
yes.
very nice. I will move on to some questions for Harsh.
Yeah,
Uh,
sure.
Just 1 minute. Yes, please go ahead.
yeah. Hi, Harsh.
Please go ahead.
Yeah.
Hi.
So you heard the speakers. So my first question would be, what governance norms would you recommend, if an MFI gets into the space which, Yeshwant just described? In the case of the Bandhan Group, there's a separate company, and I think RBI is now insisting that there's an arm's length distance. So how would you see this in terms of governance, and caution, and how should this go ahead, if at all? How would you see this?
For me, this is an important part because as a self-regulatory organization, we talk a lot about the challenges we face from our borrowers, our complaints mostly about the third-party sale products that they have been given to us to buy. There is usually a very little third maintenance and repair available for once the product is sold. So as an SRO, we have advised all our members, Bandhan is not a member, but many others, that there should be a clear distinction between the loan and the product sale. And the product sale should be at least 30 days after the loan. And there should be a clarity when the product is being sold as to who is responsible for repairs and maintenance of the products. So this is one thing about governance that I feel we should take very seriously, is that there should be no connection to the loan itself that is being sold. The second thing that is important is that what also happens is that the loan to the person who's buying the product is invariably also made to take a fresh loan to buy the product. Even if she had the ability to buy it upfront, the staff goes back and says, you are anyway taking a loan of 35,000 rupees, it's another 4,000 rupees, it's good for you. So there is a second problem, being told to take a loan when you don't necessarily need to take a loan, because the loan has its costs. So that would be the second challenge that we would advise. And the third that is also there is that since many microfinance borrowers are customers of multiple institutions, every one of them is trying to, sort of plug a a solar cooker or a solar lighting system. And we find that many borrowers now have 2 or 3 or 4 of these gadgets. Not all of them are working. They're paid for it or they're still paying for it. And our sort of recommendation would be that you should first actually check whether the person really needs one more, the customer, before you even try and say, okay, you should buy this.
Okay, thanks a lot. So there is the word of caution, and where are the checks and balances? You have it from Harsh. So I am also tempted to ask, in East Africa, say in Kenya, Uganda, and Rwanda, there are these off-grid products have gone up the value chain. So there are products, which can supply to the entire household, especially in rural areas, which have now taken place and now can be are sold a fair bit, and there seems to be value in that. Do you think that in certain cases microfinance institutions can give slightly higher loans for these kind of products, or do you think that's not something that MFIs should be getting into?
So first, I think they should not be the responsibility of see what has happened is the microfinance companies are also the ones selling, because they have the field staff. So that staff is trained, okay, here is the lighting, the one, for example, we show Nakshi creation, 6,000 rupees, 7,000 rupees, 4,000 rupees, please buy this. So such things are expensive, larger capacity, larger cost. There should be a separate person from the company that is selling the products to go out and convince the buyer that it is worth your while, and not leave it to the microfinance that you get a commission for selling this. If you chose to finance it, yes, of course, microfinance companies could finance it either in a joint or an individual loan. Since microfinance companies can do between 10 to 15% of their business as individual loans and not the joint liability with women, this is easily doable, especially if they're giving the loan for this so to say, to a customer of theirs who they already know, who's been with them for say 3 years or 4 years. So it can be done, but it should not, the selling of this should under no circumstances be done by the microfinance company. That has to take the effort of the company that actually wants to sell.
Okay, thanks a lot. And since we are in this situation, though it is not terribly related to this subject, what do you think, in this situation where lockdowns and COVID and whatever, what role are MFIs in a unique position to play, and maybe what kind of support, more support, policy or government support that you need?
So for us, we need support really in the liquidity, because we have given a moratorium to our borrowers, and Northern Arc knows about this, and they are our own members are still not got the sufficient back-to-back moratoriums from their banks and lenders. The government has just announced some things, but these typically work for very large microfinance companies. So the smaller ones, need still the support and the work that Northern Arc is doing to help give them access to liquidity. So this is one thing. I had one more point that I would like to leave with the audience and all of us to discuss, is that when I look at all these presentations about ABS and stuff, that almost all of it is about renewable energy. Is there any other product in any other area that we can look at? What about water purifiers? What about things for recycling of local waste? Is there something that can be prepared and which is relevant in the Indian context and which is then sold in a clear arm's length relationship? Because we do have for 3-4 years we've been having solar lanterns and solar charging products being sold, and there are enough of them. And of course, the government is also trying to bring grid power. But what about water? What about other things? So does green only mean solar, or does green also mean other things? And if so, how do we make those other things happen? Is a question that I would like to leave for others as well.
Great thought,
Thanks,
Harsh. Great thought, Harsh. This is something which even we have been grappling with. Our taxonomy covers a lot of products, and somehow in India, green has become synonymous with renewable energy. Thanks a lot for reminding us that it is not, and that at the micro scale, there are other products waiting to be used and whose utility is tremendous. We are close to our time, but there's one question about the RBI and RBI regulations on the transactions. Anshul, would you want to take this?
Sure, Sandeep.
Yeah. So the question was, what does RBI mandate for these transactions?
All right. So RBI has released a set of guidelines for any securitization where a RBI regulated entity is the originator. So which means any bank or any NBFC, if they want to do a securitization transaction, they need to comply with the RBI guidelines. Similarly, for non-financial originators, SEBI has released their own set of guidelines. So any corporate, if it wants to do any securitization, then the SEBI guidelines will need to follow. The two key aspects of the RBI guidelines are seasoning requirement, which is also called as minimum holding period, and second is the minimum retention ratio. What minimum holding period means is NBFCs cannot follow originate to distribute model. Once a loan is originated, it needs to remain in the balance sheet of the originator for a certain amount of time. And only once that time has passed away, the loan can be securitized. Coming to minimum retention ratio, in each transaction, RBI maintains that the originator will have its own skin in the game as well. This figure varies from 5 to 10%, depending on the underlying. But yeah, for each transaction, the seller also has his own skin in the game.
Okay, thanks a lot. There are more questions, and I would love to continue, but I'm conscious of time. Thanks a lot for all the participants, my colleagues, and for mobilizing your time, for putting in the efforts to prepare for this webinar. We will soon meet soon, and hopefully this webinar lays the foundation for a green ABS in the coming times, with the ensuing benefits being scaled up for all the consumers. Thanks a lot.
Thank you.
Thank you.
Yes, thank you.